Hey guys, Alessio, hope you're well. I have some fantastic news for you in this video because one of the biggest bubbles of our lifetime is imploding. It is crashing, and that's fantastic news. In a video that I posted not long ago, about a couple of months ago, here's what I said. I said a major bubble, the mother of all bubbles, could collapse soon. And the bubble I was talking about was the London real estate market, the London property market. And by the way, London is not just the only city in the world that's in a bubble. In fact, according to a study published by UBS, they found that other cities like Toronto, Munich, Vancouver, Sydney are also in major bubbles. But London especially has been in a bubble for some time. And in fact, it's not surprising when I show you this chart. Take a look at this. This is the chart of London house prices for the last 10, 15 years. And it's not surprising why London properties are in a bubble and extremely overvalued when you look at this chart. For example, this is the peak of London house prices back in 2007, just before the house prices crashed that year. You can see the average house price in London back in 2007, before the economic crash, was about £300,000. What is it now? Nearly £500,000 just recently. £500,000, $500,000, or just close to $750,000. I mean, that is just ridiculous when you consider the average earnings of a person in the UK or in London, and when you take into account the debts and the borrowings people have. And also, let's not forget, the number one reason why London house prices were going up so massively over the last few years is also because of foreign investors. A lot of incredibly wealthy investors from Russia and the Middle East were pouring their money into the London housing market, and as a result, this caused the housing market to go up quite massively. But of course, those investors, where are they now? Well, I'm going to tell you. According to recent reports, a lot of foreign investors are moving their money away from London, away from the UK. Just take a look at this article, for example, here. This is from City AM, and according to some economists from the London School of Economics are now predicting about a 40% fall in house prices. That's 40% fall from the highs that we had in London house prices. And here it says that leading economists have warned that the UK is leading for a collapse in house prices not seen since the early 90s, which risks plunging homeowners into negative equity. There's another article here from the Guardian newspaper which says that there's a lot of ghost towers in the UK. No, they're not haunted, but what's happening is, of course, that a lot of these foreign investors are moving their money away from London. A lot of these foreign buyers are no longer interested in buying these very expensive and luxury flats in London that were built with the intention of selling to these foreign buyers. And part of the reason seems to be, well, two reasons. One is due to the uncertainty of Brexit, the whole Brexit situation, and nobody really knows what's happening there. And secondly, because, of course, house prices, as we've just seen, have reached bubble territory. And by the way, let me just mention again that according to a study done by the University of Lancaster, they predicted that the London housing market would collapse and would implode by the year 2017. Of course, they're probably about a year too early, but nonetheless, they seem to be on the right track. And in my previous video, I showed you this chart. This is the chart of Savills. And Savills, in case you're not aware, is one of the main real estate agents here in the UK. And it's really important to pay attention to the price of their stock, because the stock price of Savills is very closely linked and actually is a very good predictor, a leading predictor of house prices in London. And in my last video, I warned about this. I said, look, the chart of Savills is showing to us a false breakout signal and divergence, bearish or negative divergence. And I showed, as you can see here in these arrows, I was pointing to the stock prices falling down from about 1,000 to nearly the 850 levels here. And I'll show you exactly where it is right now. And by the way, in case you're wondering, why do we care about Savills? Because as I showed you in my last video, the chart of Savills accurately predicted the housing market crash that occurred back in the year 2007. Take a look at this. This is exactly what happened back in 2007, before the house price crash we had here in the UK and in London, of course, around the world. Let me just show you this. So what happened back in 2007 here is that we had a false breakout signal. So as you can see here, the price tries to make a breakout through the previous high. It fails to do that. It rolls over, and also we had negative divergence. And as you can see here from this chart, just to show you what's happening to Savills, as you can see here, I mean, look at that. It's fallen from about 1,000 levels all the way down. It's now near to the 890 levels, as you can see here. So a tremendous drop. And if I just show you this chart, as you can see here, this is the weekly chart. It's more of a long-term chart of Savills, as you can see here. According to this chart, well, firstly, you can see that we're potentially in the beginning of a wave 3 move. And for those of you who follow Elliott waves as I do, wave 3 is the strongest part, the most dynamic and most powerful part of a trend. In this case, it would be a downward trend. And also we got momentum increasing, as you can see here on this pulse signal. And by the way, this means a potentially big move is setting up here on Savills. Now, Savills is quite oversold right now, so there's probably a potential for bounce. We may bounce from here up to resistance, and then we could see some potential failure and rollover. But whatever this is, it's not just Savills is in trouble. Let me just show you another one, in case you're probably thinking, well, what about other real estate agents? Let me show you Foxtons. Foxtons, in case you're not aware, is also one of the leading real estate agents here in the UK. Look at this. I mean, if this is not a disaster, then I don't know what is. As you can see here, I mean, Foxtons has just been falling. I mean, this is just getting slaughtered, as you can see here. And it's not just Foxtons. Also, take a look at one of the major developers here in London, and that's Barratt's. Look at this. Barratt's also dropping. In fact, Barratt's has dropped down to the previous lows of March. And that's quite important because I want to see what Barratt's does over here. Is Barratt's going to fall below the lows of March? Because that would be significant. And that could be a deadly sign, in fact, for the London market. Let me just show you this back. Let's go back to Savills here just for a moment. All right, so one of the reasons why this chart looks terrible for Savills and also for the London property market is because we've broken through several support points. I mean, there was some support here that we've broken through, as you can see, and also this support right over here. I was keeping an eye on this, and we're definitely now below that level. So, you know what? Here's what I would say. If Savills can rescue itself and get back above those levels again, if the price of Savills can get back above that resistance level and get back above the 925, 930 level, then you know what? This was false alarm, and that could actually mean a potential buy signal. But at the moment, the way things are right now, this looks to me like the break of market structure, the break of support, and this increases the odds of a likely correction or adjustment in the London house prices. And I would just say this, it's not surprising that London house prices are due for a correction. I mean, again, just look at this chart one more time. This is the 2007 highs before the market crash that occurred. And let me just say this. When the crash occurred, house prices fell by about 10-15%. I spoke to a good friend of mine, Mark Scott, from Lifetime Mortgages. And by the way, in case you're wondering, and in case you're looking for a great mortgage broker in London, go and speak to Mark Scott. He's a fantastic mortgage broker and probably one of the best people I know in London when it comes to mortgages and when it comes to house prices in this country. So if you're looking for a great mortgage broker, speak to Mark Scott. You can find him on the link you see here. And what Mark said to me was this: look, the last economic crash, the last house price crash that we had in the UK, in London, that brought down London house prices by about 10-15%, which means if we see another drop in the next couple of years, I would not expect that drop to be any more than, say, 10-15%. Now, that certainly would put a floor on the house price drop if it happens. That could bring the house prices in London to an average of about £400,000 to £425,000. And as I just showed you earlier in this video, some economists here in London have predicted much worse drops, about 40% drops in house prices for London. And I just want to say this, that I know some people who are watching this video right now may not be pleased by the idea of falling house prices, but let me just mention this one more time. If you are a professional investor, if you're looking to be a long-term investor in properties and real estate, you would want a fall in house prices, because it's only when you get those corrections and those drops in house prices that we can find those great opportunities, those phenomenal once-in-a-lifetime opportunities to buy cheaper and buy at lower prices for the long term. I don't think anybody could disagree with that.